NIO EV maker revealed their plan step by step on reaching $1,000. The Chinese manufacturer of electric vehicles, NIO Inc., will open its first factory outside of China in September in Pest, which is located in Hungary. New updates coming from the NIO side, and it has an optimistic future, which we can see. Are you excited to know more? Well, welcome back to Stock Market News, you all. And if you like or follow NIO stock or the stock market, well, you came to the right spot. So let's begin. According to the social media account of the company that is listed in Hong Kong and New York, the factory will have a surface area of 10,000 square meters, and it will create power charging and battery swap stations for European consumers, and it will provide after-sales services. NIO has already begun selling automobiles in the Norwegian market, and the company has future intentions to sell automobiles in more European nations, including France, Germany, and the Netherlands. According to data collected from the sector, it has constructed a power charging and battery swap station in Norway and has sold 750 cars in the country. The electric vehicle manufacturer NIO announced 2 job openings on LinkedIn on Wednesday for its purchasing team in Hungary. The jobs are for a senior buyer and an indirect spend buyer, respectively. They will both be responsible for procurement activities, largely in areas of plant-related services as well as production material, which is a task that will fall on both of their shoulders. NIO is aggressively extending its activities across Europe and will join 4 new markets by the end of the year and another 8 during 2023 on its way to achieving its aim of being present in 25 different countries by 2025. In the coming months, the company will need to construct the necessary charging infrastructure to support this expansion. Additionally, the company has already confirmed the opening of a new plant in Hungary that will be used to construct battery swap stations for export to its several European markets. The opening of these vacancies and their description of them indicate that NIO is looking to hasten the process by acquiring an existing plant in the Hungarian capital. The alternative of shipping the stations from China to the European markets is quite expensive for the company. According to the first report that was published by EV on April 15th, NIO posted a job opening for a plant manager on their website. The job description stated, "With NIO Power products going to EU market, we are looking for an EU plant manager to work with NIO China team to establish a plant in EU." On January 30th, NIO referred to the nation for the first time when they announced the availability of a position for an EU SSC finance team leader in Budapest, which is the capital of Hungary. During that period, NIO was looking for someone to fill the position of leading and managing the operations of the financial team in NIO's Shared Services Center in Budapest to facilitate the fast-growing business in the European markets. On Saturday, the firm announced on LinkedIn the first employment openings that will be available as a result of the expansion of its showrooms, which are referred to as NIO houses, to locations in the United States. Both a senior real estate manager to be in charge of site selection and negotiation of lease arrangements for additional sites, and a head of construction to be in charge of driving the construction and development strategy of NIO houses are currently in the process of being recruited by the country. NIO has included the nation on its list of markets in which it will be present by the year 2025. However, it's still unknown if this will occur in the upcoming year, in 2024, or only in 2025. In the meantime, the company is already making preparations for the second phase of its growth in Europe, which will involve entering 8 new countries: Austria, Belgium, France, Hungary, Italy, Spain, and Switzerland, in addition to Portugal. The electric vehicle manufacturer announced its intention to increase the number of markets it serves to 25 by 2025 during the most recent NIO Day, which took place in December 2021. Despite delivering a lower number of vehicles in June compared to June of last year, NIO stock has increased by 4% and is currently trading at $20.52 on Monday morning. A year-over-year increase of 27% can be attributed to the luxury electric vehicle manufacturer's delivery of 10,052 vehicles in July. Some watchers were taken aback by the rising share price because the number of deliveries fell well short of the 12,961 amount recorded in June. In comparison to the previous month, this represents a decrease of 22%. The manufacturer may have gotten back on its feet in June, which may have contributed to the increase in figures. In April, deliveries fell down a cliff as a result of a region-wide COVID stoppage. The number of high-end SUVs and luxury sedans delivered by NIO in July was 7,579 and 2,473 respectively. July sales of new energy cars in China saw a year-over-year increase of 103% compared to the previous year. The NIO stock on the New York Stock Exchange continued its upward trend for a third consecutive trading day and finished the week with a gain of about 4% after Strokes extended their rise into Friday trading. The price of a share of NIO was up another 1.23% by the time trading for the week was done, coming in at $19.73. Additionally, each of the three major indices experienced gains for a third consecutive trading session, culminating in their greatest monthly performance since the year 2020. On the back of gains made by major technology companies like Amazon and Apple, the Dow Jones Industrial Average increased by 315 points, the S&P 500 index increased by 1.42%, and the Nasdaq increased by 1.88%. This week, the Chinese electric vehicle manufacturer NIO reached another one of its production goals by manufacturing its 500,000th drivetrain system. Additionally, it disclosed the brand new electric propulsion technology it would be included in the ET5 car, which is scheduled to go on sale later on in the year. It is speculated that the ET5 would compete directly with Tesla's Model 3, which is now one of the most well-known and widely purchased electric cars in the world. As the company continues to develop in the European market, NIO has recently announced that it has reached an agreement to form a collaboration with Hungary to construct a battery swap station. After being added to the SEC's list of firms that have the possibility of being delisted, the major Chinese technology company Alibaba had its stock price drop significantly on Friday. Additionally, the stock was trading lower as a result of Jack Ma's announcement that he will be giving up control of the financial technology company Ant Group to please regulators in Beijing. During trading on Friday, the value of an individual share of BABA fell by 11.12%. The EV manufacturer NIO is experiencing some difficulties. In addition to problems with the macroeconomy, such as rising prices and interest rates, the automaker has been experiencing problems with its supply chain, which has resulted in low deliveries, and there are now concerns that they may be delisted from the U.S. exchanges. This week, NIO stock appreciated. Nevertheless, the majority of those gains were lost on the very same day. Although the share price reached a high of $42 in November 2021, it has been unable to captivate the interest of investors since then. Its all-time high was substantially higher than its current price of $13, which is where it's trading at right now. We've done videos about NIO stock on multiple occasions in the past, and I feel that the firm has the potential as well as the technology to establish a name for itself in the increasingly competitive electric vehicle industry. Concerns about the company being delisted have put enormous pressure on the market, but I believe the reaction's exaggerated. NIO is now investigating the possibility of obtaining a secondary listing on the Singapore Stock Exchange. May 20th was the day that it began trading on the exchange. The signing of an agreement by NIO to construct a facility in an economic development zone in Hefei, China, for the production of their mid to high-end brand models is another piece of encouraging news that will assist the price of NIO stock to acquire that upward momentum. This plant may begin production as early as 2024, and it'll go up against some of the most well-known brands in the electric vehicle business. If the most recent article from the CNEV Post is any indication, it might be a game-changer for the automobile manufacturer. NIO is now working on plans to develop a mass-market brand by producing a fleet of models that are both economical and easily accessible to the company's customers. NIO's stock price may increase for the company after it makes an official notification regarding this matter. Hey, that's it for today's video. We'll be back soon with more updates. Thanks for watching. We ask that you please do like the video and make sure you subscribe to our channel. Have a great day.